Good evening, friends. Today I have an update with regards to a company called MTAR Tech. The share has surged 10% after it won a 226 crore order. The growth is optimistic. Clean energy and aerospace vertical company anticipating significant orders in both segments going forward in the future. So this is one of the product displayed that the company is into, surged by 10%. I'm sorry, this is seems to be an old update. So this is something with regards to orders that they may have won in the recent past, not immediately. Yes. So furthermore, the expected orders are to be executed within 1 year, and the order shall be executed by April 2026. The order value reflects companies' increasing market share in clean energy and aerospace sectors. This was probably an old story. We'll see if we can get more information. Uh, Companies confident of getting in order inflows for clean energy. Companies expecting significant orders going forward, as per the MD and promoter of the MTAR Technologies, Mr. Parvat Srinivas Reddy. Uh, Currently trading at 1771. The stock was driven by a spike in trading volumes in the counter. 9 lakh shares changed hands on the exchange, already surpassing the 1 month daily traded average of 3 lakh shares. So the views and investment tips are by investment experts, and money control does not manage this information. So this also doesn't reflect any personal information or advice that is given out by the author. So please consult a financial stockbroker or expert before making any investment decisions. Let us see if we can get some financial information on this company. Okay, this is the logo of the company. This is the current price. You can see about 1700. It's up about 1.16% in the last 5 days, 2% in the last 1 month, less than 1% in the last 6 months, and a negative of 10% in the last 1 year. So definitely the correction that we had in the months of September, as in the months of October, November, has impacted this company as well. So let's look at some information. MTR develops and manufactures components and equipment for the defense, aerospace, nuclear, and clean energy sectors. The company was incorporated in 1970 by Mr. P.R. Reddy, Mr. K.S.N. Reddy, and Mr. P.J. Reddy to cater to the technical and engineering needs of the Indian government in the post-embargo regime. MTR started manufacturing footprints in Hyderabad with 7 units spread across 4 kilometer radius and a dedicated export facility as well. Company supplies specialized products such as ball screws, water lubricated bearings, roller screws, electromechanical actuation systems, ASP assemblies that find applications across diverse sectors. High of 2076, market cap of 5280 crores, book value of 238. So the company is trading at about 7 times its book value, or slightly more than 7 times its book value. Dividend, no dividend paid. Return on capital is 10%, return on equity is 7.6%, face value is 10 rupees. Company has a median sales growth of 16.5% in the last 10 years, which is good. Company is trading at 7.23 times its book value, hasn't paid any dividend. Promoter holding is 31%, which is pretty low. The low return on equity of 11% in the last 3 years. Promoter shareholding has decreased by 18.5% in the last 3 years. Sorry, I think that is an important negative sentiment which could cause the stock to be volatile in price and in volume as well. So revenue has been inconsistent. You can see over the last 3 quarters, and in terms of profit, you can see again inconsistent in the net profit as well. Overall sales year-on-year comparison, maybe about 16% revenue growth over the last 1 year. In fact, net profit has reduced by about 4% in the last 1 year. So you can see compounded profit growth showing as -1%. However, if you calculate the net profit, it shows that there is a variation of about 4%, 4% less, sales growth of 17%, stock price growth of -9%, return on equity of 8% in the last 1 year. So RO, return on equity, from 11 is dropped down to 8. Reserves have grown slightly, borrowings have reduced slightly, which is good. However, overall total liabilities have gone up, which again is a concern. Debtor days have increased, inventory days have reduced, which is a good sign. Days payable have increased, which means the company is taking longer than before to pay its suppliers and creditors, which is impacting the company in a negative way. Working capital days have reduced, which is a good sign. However, you can see return on capital employed 2 years ago was 22% and now it's down to 11%. So that is something would impact the company negatively as well. You can see public shareholding has gone up to 37%, and the direct institutional investors have increased their stake by 7% in the last 6 months. So that is a positive. Public holding has also reduced by about 1.4%, and the negative impact here is that the promoter shareholding has reduced by 5%. So one good thing is the promoter shareholding has been purchased by the direct institutional investors, giving the company some stability. However, the public holding with the 38%, it's a huge number and it can definitely negatively impact any price related negative sentiment into uh, negative run or a correction in the stock price. This is going to be a highly volatile stock, as we saw in one of the internet news that was circulated earlier. A high volume of shares already traded in the last uh, quarter, or the last news update that we just went through in the video. So thank you friends for watching. Please share this video with your friends, family and associates so those can benefit from this information. Please share your valuable feedback in terms of improvement in the content and the presentation of the video. Also please forward this to as many as people as you can, and wish you a good night and wish you a happy week ahead. We'll connect with another video very soon. Thanks for watching.